Welcome to our deep dive into Stoneco's 4Q24 earnings report.
Yeah.
We're going to break down their official release, and we're going to uncover what's really happening, beneath those numbers.
hmm
Stoneco, a financial technology leader in Brazil, just dropped their earnings,
Right.
and we're here to help you understand what it all means.
It's a pretty interesting report this time around.
Yeah.
I think it goes beyond just like the financial snapshot.
Yeah,
It offers a glimpse into, I think, how Stoneco is navigating a rapidly changing financial landscape.
right. It's not just about the numbers themselves, but what they tell us about, Stoneco's future,
Yeah.
especially in a dynamic market like Brazil.
Absolutely.
In the CEO's letter, they highlight a 14% CAGR in total revenue
hmm
and a 92% CAGR for earnings per share over the last 2 years.
Yes. And for those who need a quick reminder, CAGR stands for compound annual growth rate, which, gives us a smoothed out picture of growth over time. What's particularly impressive is that they achieved this during a challenging economic period, both in Brazil and globally.
Yeah,
This resilience really underscores their strategic approach.
absolutely. It's easy to overlook the wider economic context, but, it makes these gains even more significant.
Yeah.
One thing that caught my eye was the performance of their MSMB segment.
hmm
For listeners who might not be familiar, MSMB stands for micro, small, and medium businesses.
Right.
It's Stoneco's core market, right?
It is. In fact, the MSMB segment is crucial to the entire Brazilian economy. These businesses face unique challenges,
Yeah.
especially when it comes to accessing financial services. Stoneco has really positioned itself as a key player in addressing those needs.
Absolutely. Their MSMB card, total payment volume, or TPV,
Hmm.
grew by 18% year over year,
Wow.
reaching a staggering $516 billion.
Huge.
But they slightly missed their guidance for this segment.
Right.
What factors contributed to this?
Well, they attribute the slight miss to the rapid adoption of PIX, Brazil's real-time payment system.
Okay.
It seems its growth outpaced even their own projections.
Wow.
This has raised some concerns about PIX potentially replacing credit card usage,
Right.
which would obviously impact Stoneco's business.
PIX is everywhere in Brazil these days, so it's a valid question.
hmm
How does Stoneco view this development? Is PIX a threat or an opportunity, or both?
Well, Stoneco's data suggests that PIX is primarily replacing debit transactions, not credit.
Okay.
And they've been quite successful at monetizing PIX volumes.
Interesting.
They see it as an opportunity to expand their reach and offer more comprehensive services to their clients.
Interesting. So they're not just reacting to this shift in the payments landscape, they're actively adapting and finding ways to incorporate PIX into their strategy.
Exactly.
In fact, they even launched PIX NFC,
Yeah.
which, for those who aren't familiar, allows users to make contactless payments using PIX through their smartphones. This shows their commitment to innovation and staying ahead of the curve in the rapidly evolving world of fintech.
Yeah.
It also speaks to their diversification strategy. They're not content with being just a payment processor. They're actively expanding into banking and credit services.
Absolutely.
That expansion is really reflected in the numbers.
Yeah.
Their retail deposits surged by 42% year over year, hitting $8.7 billion.
Wow.
That's a significant beat, surpassing their guidance by 24%.
Huge.
And their credit portfolio practically quadrupled to $1.2 billion, exceeding their target.
Yeah.
Those are some impressive figures.
They are. And what's fascinating here is that this diversification goes beyond just adding new products.
Right.
It's about creating a holistic ecosystem for MSMBs where they can access all their financial needs in one place.
Yeah.
It's about becoming that essential partner, building deep relationships, and ultimately capturing a larger share of the market.
That's a compelling strategy. However, some analysts are raising concerns about potential market saturation in Brazil's electronic payments sector.
Yeah.
How does Stoneco address this, and what evidence do they offer to support their optimistic outlook?
So the CEO directly addresses this concern in the report,
Okay.
arguing that the often cited 94% electronic payments penetration rate, which might suggest a saturated market, is actually misleading.
Okay.
Their analysis indicates that this figure includes transactions that don't accurately reflect final consumption,
Okay.
such as financial intermediation or property investments.
So they're suggesting that the true measure of market penetration is lower than commonly perceived.
Precisely.
Okay.
They also highlight the concept of total addressable market, or TAM, and argue that it's much broader than many believe.
Okay.
They believe the TAM extends beyond personal consumption to encompass intermediate consumption as well,
Okay.
suggesting significant room for growth.
That makes sense.
Yeah,
They're essentially saying that the opportunity in the Brazilian payment space is still vast, and they're positioning themselves to capitalize on it.
right.
But what about their software division?
Yeah.
There's been a lot of discussion surrounding their strategy in that area.
Yes, and the report sheds light on a strategic shift they're undertaking.
Okay.
They're exploring various strategic alternatives for their software division with the goal of maximizing shareholder value.
Okay.
They've received interest from potential buyers, but so far, no offers have aligned with their internal valuations.
So they're open to divesting the software division,
Mhm.
but only if it makes financial sense and aligns with their long-term goals.
Exactly.
What's driving their decision to explore these options?
They've realized that cross-selling financial services through their existing channels is proving more effective than having a dedicated software sales force.
Okay.
This suggests they're prioritizing resource allocation towards their core strengths and areas where they see the greatest potential for growth.
It sounds like they're being very deliberate and strategic about every decision, carefully weighing the potential benefits against their long-term vision.
Yeah.
But before we delve further into their financials, I want to touch on something that really caught my attention: their use of AI.
Their AI initiatives are incredibly insightful and demonstrate their forward-thinking approach.
Yeah.
For instance, their proprietary AI now powers 100% of customer service interactions through their app.
Wow.
This has resulted in higher customer satisfaction and a 45% reduction in calls.
That's impressive. A 45% reduction in calls. That's a significant improvement in efficiency.
Yeah.
How does this AI technology actually work, and what impact is it having on Stoneco's operations and customer relationships?
So it's essentially an AI-powered chatbot
Okay.
that's able to handle a wide range of customer inquiries, from basic account information to troubleshooting technical issues.
Okay.
What's remarkable is that it's not just deflecting calls, it's actually resolving issues and providing a positive customer experience. This is a testament to the sophistication of their AI and their commitment to leveraging technology to enhance customer service.
It sounds like they're at the forefront of innovation in this area, and they're not stopping there.
Yeah.
The report mentions they're developing AI co-pilots for both their sales and customer service teams.
Yes, these AI co-pilots act as virtual assistants, providing real-time guidance and support during interactions with clients.
Wow.
Imagine having access to a vast knowledge base and data-driven insights at your fingertips.
Yeah.
That's what these co-pilots provide. They've already facilitated nearly 2 million conversations,
Yeah.
demonstrating their potential to streamline processes and improve efficiency.
This is a fascinating development. It sounds like they're really pushing the boundaries of how AI can be used to enhance both customer and employee experiences.
Absolutely. It's a clear indication of their commitment to innovation and their willingness to embrace new technologies to drive their business forward.
We've covered a lot of ground in this first part of our deep dive.
Hmm.
We've seen Stoneco's impressive growth, their strategic moves to adapt to the evolving payments landscape, their expansion into banking and credit services, and their innovative use of AI. What's the one key takeaway you want our listeners to grasp at this point?
I think Stoneco is a company in transition, actively shaping its future amidst a dynamic and challenging environment.
Yeah.
They're not just reacting, they're anticipating, they're adapting. Their focus on the MSMB market, their willingness to embrace new technologies, and their commitment to creating a holistic financial ecosystem for their clients are key indicators of their long-term vision.
This has been a really insightful look at Stoneco's performance and strategy. In part 2, we'll delve deeper into their financial health, their plans for returning excess capital to shareholders, and their long-term outlook.
Yeah,
Stay tuned for more.
sounds good.
Welcome back to our deep dive into Stoneco's 4Q24 earnings report. In this part, we'll take a closer look at their strategic decision-making process, their organizational culture,
Mm-hmm.
and how those elements contribute to their overall success.
It's fascinating how Stoneco kind of weaves its strategic thinking into the very fabric of its operations,
Yeah.
particularly when it comes to like their software division.
Right.
They're meticulously evaluating strategic alternatives, always with an eye on maximizing long-term value for their shareholders.
They seem to be taking a very measured and deliberate approach,
Yeah.
not rushing into any hasty decisions.
Right.
What are they prioritizing, when assessing the success of their software division?
Well, their main metric for success is how the software division contributes to their leadership in the acquiring business,
Okay.
specifically within the MSMB segment.
Okay.
They believe that a stronger position in acquiring leads to higher revenue, increased profitability, faster capital turnover,
Right.
and ultimately a better return on their investments.
So it's not just about the software division's standalone performance, but rather how it, strategically integrates with and strengthens their core business.
Exactly. It's a very strategic view, looking at the bigger picture and how all the pieces fit together.
Yeah.
And it leads to some interesting decisions.
Yeah.
For example, one might wonder, why not simply hold on to the software division if it's generating revenue?
That's a good question.
Hmm.
What's the rationale for potentially divesting it?
Well, Stoneco recognizes that, maintaining a leading position in payments and expanding into banking and credit requires significant capital.
Yeah.
And near perfect execution.
Right.
They're choosing to, prioritize their resources
Yeah.
where they believe they can achieve the biggest impact.
So by potentially divesting the software division, they could free up capital to fuel growth in other areas that are, more central to their long-term vision.
Precisely. It's about strategic realignment.
Yeah.
Focusing on their core strengths.
Right.
And ensuring they have the resources to execute their plans effectively.
Yeah.
And, they're not just looking for any buyer.
Mm-hmm.
They're committed to finding the right strategic fit at the right price.
Mm-hmm.
A price that reflects the intrinsic value they see in the software division.
It's interesting that they haven't accepted any offers that fall short of their internal valuations.
Right.
This suggests they're not, desperate to sell.
Mm-hmm.
They're being very disciplined and patient.
Absolutely. They're demonstrating a commitment to long-term value creation.
Yeah.
Not just chasing short-term gains.
Right.
And while they're carefully exploring, these strategic options, they're not letting it distract them from maximizing the software division's value independently.
Right.
They're continuing to cross-sell financial services to their software clients and ensuring it operates efficiently.
It's impressive how they're managing this, complex situation while still keeping their eye on the bigger picture.
Yeah.
And speaking of the bigger picture, one theme that keeps emerging from this report is adaptability.
Mm.
It seems to be more than just a buzzword for Stoneco. It's woven into their culture and operations.
It is. The report emphasizes how, their organizational structure and culture are designed to embrace complexity and constant change.
Yeah.
They acknowledge that, the ability to adapt quickly is crucial in a dynamic market like Brazil's.
They're not just riding the wave of change.
Yeah.
They're anticipating it
Right.
and actively shaping their future.
Yeah.
And they're also remarkably transparent
Mm-hmm.
about the fact that they don't always get things right.
Yes.
You
They're open about their missteps,
Mhm.
which, actually demonstrates their commitment to learning and continuous improvement.
Right.
They view setbacks as opportunities to analyze, adapt,
Yeah.
and, come back stronger.
This approach fosters a culture of resilience and innovation.
Absolutely.
The report also highlights their focus on building a culture based on trust, expertise, and functional excellence.
Mm-hmm.
It's clear they value their employees and recognize that their people are, a key driver of their success.
Absolutely. And this is reflected in their organizational design.
Right.
So, they've moved away from traditional business unit structures,
Okay.
which, often prioritize control and hierarchy,
Right.
towards a more functional structure.
What's the thinking behind that shift?
Well, this structure aligns expertise with decision-making authority.
Okay.
Instead of having, general managers making decisions across various domains,
Right.
they empower specialists with deep knowledge in specific areas to make the calls.
So they're putting decision-making power in the hands of the people who are closest to the work and have the, deepest understanding of the nuances and complexities of their respective fields.
Exactly. This fosters agility
Right.
and allows them to respond more effectively to, the ever-changing demands of the market.
Yeah.
It also ties back to their commitment to delivering high-quality products and services.
Yeah.
by empowering experts.
Right.
They're ensuring decisions are made, with a deep understanding of the underlying complexity.
This approach seems to be paying off, as evidenced by their strong financial performance and their ability to navigate, a challenging environment.
It's a testament to their strategic thinking,
Yeah.
their organizational culture, and their commitment to continuous improvement.
We've covered a lot of ground in this section.
We have.
We explored how Stoneco is strategically managing its software division, its remarkable adaptability,
Mhm.
and its, unique approach to building a thriving organizational culture.
Yeah.
What's the overall message here for our listeners?
I think the key takeaway is that Stoneco's success isn't just about numbers and financial
Oh,
results.
right.
It's about, creating a culture of adaptability,
Mm.
empowering experts,
Yeah.
and constantly seeking ways to improve.
Right.
This deep-rooted approach is what allows them to not only survive,
Yeah.
but thrive in a rapidly changing market.
This has been a fascinating look into the inner workings of Stoneco. In our final part, we'll dive into their long-term economic objective, their approach to capital allocation,
Mm-hmm.
and their vision for the future. Stay with us. Welcome back to the final part of our deep dive into Stoneco's 4Q24 earnings report. We've explored their strategic shifts, their, innovative use of AI, and their unique organizational culture. Now let's wrap things up by examining their approach to, capital allocation, shareholder value, and, what they see on the horizon.
Yeah, Stoneco's commitment to a strong capital structure while returning excess capital to shareholders is, I think, really key to understanding their long-term vision.
Yeah.
They've estimated over our $3 billion in excess capital as of December 31st.
Wow.
It's worth noting that their approach to deploying this capital is quite strategic.
They're not just like, sitting on a pile of cash
Right.
or rushing to distribute it. It sounds like they're taking a very measured and deliberate approach.
Exactly. They've stated their intention to return, this excess capital to shareholders over time,
Yeah.
but only when they don't see immediate opportunities for value accretive growth.
Right.
This demonstrates, a commitment to making decisions that benefit their investors in the long run.
It's reassuring to see that level of financial discipline.
Yeah.
Their, transparency regarding their capital allocation model
Hmm.
also stands out.
Right. So they emphasize three pillars: maintaining a minimum level of common equity, safeguarding their credit ratings,
Right.
and ensuring a positive net cash position. This provides a clear framework for, how they manage their finances and allocate capital.
It sounds like they're taking a very prudent and measured approach, balancing growth with financial stability.
Mm-hmm.
But what about their outlook for the future?
Yeah.
What opportunities and challenges are they anticipating?
So the report includes, some insightful, forward-looking statements.
Sure.
They acknowledge that the, competitive landscape is intense. Mm-hmm. But they believe their focus on the MSMB segment and their expansion into banking and credit services positions them well for, continued growth.
It seems they're aware of the need to constantly adapt and innovate to stay ahead in a dynamic market.
Absolutely. They also highlight the importance of, navigating the regulatory environment in Brazil,
Right.
which can be quite complex.
Yeah.
Their track record suggests they're adept at adapting to new regulations and working within those frameworks.
And of course, we can't overlook their continued investment in technology, especially their, innovative use of AI.
Right.
These initiatives seem likely to give them a competitive edge.
Agreed. They're clearly committed to leveraging technology to, enhance efficiency,
Yeah.
improve operations, and provide an exceptional customer experience. This forward-thinking approach is a key strength.
So as we conclude our deep dive into Stoneco's 4Q24 earnings report, what is the the most important takeaway for our listeners?
Well, I think Stoneco is a company undergoing remarkable transformation.
Mm-hmm.
They're demonstrating adaptability, strategic foresight, and a strong commitment to creating long-term value for their shareholders. They're tackling challenges head-on,
Yeah.
embracing innovation,
Mhm.
and solidifying their position as a leader in Brazil's dynamic fintech ecosystem.
It's been a fascinating exploration of their earnings report,
Mhm.
revealing insights into their performance,
Yeah,
strategy,
right.
and vision for the future. We've covered a lot of ground.
We have.
but it's just the beginning.
There's always more to uncover, and I encourage you, the listener, to continue exploring the world of Brazilian fintech.
Yeah.
It's a rapidly evolving landscape with immense potential.
With Stoneco's focus on this, evolving digital financial landscape,
Yeah.
what opportunities and challenges do you see emerging for them and the industry as a whole?
Mm.
It's something to consider as you delve deeper into this space.
Right.
Remember, this deep dive was just a starting point.
A jumping off point.
There's a universe of information out there waiting to be discovered. So keep learning, keep asking questions, and keep diving deep. Until next time.